Yeah, but don't forget we had an 8-month consolidation with a 40% range.
Yeah, that's why I ask.
Right. So generally speaking, it tends to be explosive coming out, the banana zone, right? And I kind of set people up for the banana zone, and here we are in the banana zone.
Here we are in the banana zone, the ultimate phase for massive price rallies that could catapult Bitcoin well beyond $100,000. That's the latest forecast from Real Vision CEO Raoul Pal. Pal explains that post-election years often see robust market growth, fueled by shifts in regulation and leadership. This pattern has played out before and is expected to repeat in 2025, following Donald Trump's presidential victory. According to Pal, Bitcoin could surge past $100,000, experience a sharp correction, and then rally again toward the year's end, mirroring the market cycles of 2017 and 2013. Stick around until the end of the video as Raoul Pal breaks down why he believes Bitcoin is on the brink of exploding into the banana zone.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
So the question is...
So we're in the banana zone. So we're in... You're saying we're firmly in the banana zone.
How could it not be bananas, right? 50% in a month.
Yeah. How big are the How big are the bananas in the Cayman? Because that's quite a big banana.
Okay, they're not very big here, but... We're not far from a lot of big banana plantations in different islands. But so that's a decent sized banana, but that's the start, right? Because generally speaking, the post-election year, or what we would call crypto fall or crypto autumn, tends to be very strong. So it tends to be very strong. The macro backdrop is obviously very good because of deregulation, new government, all of that stuff. So we've got a good setup. It's gone far and fast. I think everyone's a bit PTSD'd still, so which is why I err towards the it probably has one more squeeze because so many people think it needs the correction now. But I hear your point of view too. So I'm not saying it has to be one or the other, but that's my view. It goes up first. Everyone thinks, oh, it's fine. We're at 110. We're getting 150 now, and then it corrects in everybody's faces quite sharply.
So you're saying max pain? You're saying max pain is another leg up. That's what you're basically saying. Max pain is sending this thing one leg higher.
Yeah, one leg higher in kind of disbelief, and then kind of trapping a bunch of new entrants in, and then it does the typical 30% correction in a week and a half, and everyone's like, "Holy shit, what is this thing I've bought? Why did my friend at Thanksgiving tell my cousin at Thanksgiving tell me to buy this? It's gone down 30%." We've got to go through that sort of stuff. Then normally it should rally all the way through till US tax season.
Which is April. So that's April.
Yeah, it's the March-April period. It usually is extremely strong going into that. And then if it's very strong, then you have a very big correction because everyone needs to pay some taxes. So, and then normally what happens is it corrects again. So you can see it there in 2021. It then had a 50% correction that time, and I'll come on to that in a sec. And then it rallies into year end. I think we're closer to a 2017 analogy, which was a much stronger back end of the year. I think people have real PTSD from last time. And I was actually going through this morning, what was the key factor that caused the stunted cycle last time? It's because the speed the business cycle went up straight out of recession, and how fast financial conditions peaked. They peaked in March of 2021, and the market essentially peaked there with the second attempt at rally. 2017 peaked way towards the end of the year. So it was just the weird setup of the post-COVID, inject all the liquidity, then, oh my God, we need to withdraw it. That setup, I think, caused that cycle, while 2017 and 2013 were more similar.
Okay, and
so that means a correction over the summer, and then a big rally into year end.
Similarly, Fundstrat Capital CIO Tom Lee has forecasted that Bitcoin's bull market will persist through December, predicting the leading cryptocurrency will surpass $100,000 by year's end. In a recent interview on CNBC's Squawk Box, Lee highlighted how growing demand from both institutional and retail investors is creating a supply shortage. As more investors acquire Bitcoin, its scarcity is expected to intensify upward pressure on its value. Lee is confident that once Bitcoin crosses the $100,000 threshold, a surge in demand will drive prices even higher. He believes Bitcoin will close the year well above $100,000, stating it's only a matter of time before this milestone is achieved. Now, let's turn back to Raoul Pal as he shares more expert insights on the future of crypto.
Go back to the longer version of that. Because everyone shows this and goes, oh my God, it's awful. That is a big kind of wedgie pattern. It doesn't look catastrophic, right? It's been kind of sideways range.
Yes.
But my guess is, same way as you, that ETH probably outperforms. And the reason being is you're just going to deregulate this thing. And if you are a financial institution, you will tend to build on ETH or ETH layer 2s. And the reason being, it's like IBM or Microsoft. It's a broad, deep ecosystem. You don't get fired for doing it. I don't disagree. There's that weird psychology that goes on. It's also, I think, there is going to be fundamental flows behind it as well. I think ETH overbuilt capacity or block space for where we are currently in the market because of the layer 2s. But over time, I think we'll use that block space up because I think the institutions will use ETH. Again, think of Apple versus Microsoft.
Okay.
Right. There is no investment bank in the world that uses Apple.
Because?
Why? The ecosystem of developers and applications for Microsoft is much bigger. This is exactly the same.
Okay.
So we may use Apple at home, we may use all Apple phones, but the big corporations don't use Apple unless they're in the media industry.
And that's because they feel more comfortable with Microsoft devs in the institutional setting, so to speak.
And you can hire more because there's more around, and there's more applications already been built on it. It's past the kind of Lindy test. So they think, okay, this is the easiest way to do it. So let's say we're a bunch of banks and we want to have some internal settlement system between us for derivatives, whatever it is, right? We're unlikely to use Solana. We're more likely to use EVM. So if it's NASDAQ, I think it could be Solana or SUI, something, because it doesn't have to integrate. It just needs to work fast, right?
Yes.
If it's something that needs to be settled, processed, clients, systems, accounting, all of this shit, the depth is all there for EVM. That's what's my working hypothesis. I'm not sure ETH will outperform Sol, but I'm pretty sure from now on, ETH outperforms Bitcoin. Cast your mind back to 2020.
Yes,
it was
I remember.
November 2020 that ETH really started outperforming Bitcoin. And I think SUI outperforms Sol. So that's my risk stack. So the least risky Bitcoin starts to underperform. Now we're getting to alt season as Bitcoin dominance falls. ETH will do better, but Solana is earlier in the adoption curve, so it does better. SUI is earlier in the adoption curve and riskier, so it does better.
Do you think we're at the part of the cycle where we're like due for that first flash out?
I'm going to show you the chart because this chart, somebody's stolen off me. They're putting it around on Twitter. But the person who put it up copied our chart, but he used it, I think, at an 8-week or 8-week lead. We think the best fit is the 12-week lead. Now, who knows who's right in this, right? This is where all fitting patterns and hoping it works. But generally speaking, for me, this is a rerun of 2017. It's very similar. And that peaked out end of deck, fell 35% in Jan for like 3 weeks and then rallied. So your hypothesis, I think, is right. I actually think it probably gets to the kind of 110, 120 first. But, it's pretty 50-50 which chart works. But really what it's saying is liquidity, because of the dollar going up ahead of the election, because of rates going up ahead of the election and the fears about Trump and fears about tariffs and stuff like that, what was causing that issue, and that does lead crypto prices. So a strong dollar, as we know, is a wrecking ball because it's tightening financial conditions. It's tightening financial conditions. So that correction was the strength of the dollar. So money supply is increasing, but it was being offset even more so by that recent spike in the dollar, which I think is reversing now. 2016 Trump, Exactly the same happened. The dollar went up and rates went up. January, they all reversed. And they continued down all of that period. So we need to go back to 2016, right? So what happened is 2016, we had that spike. Then it came back down for the rest of 16 and then eventually spiked later from 18 onwards. So, that was perfect, very similar kind of setup, not identical looking, but same idea. Now, obviously, the Federal Reserve is supposed to be independent, but they're going to try and force something to get liquidity and growth up. If you think of the ISM survey, which is the business cycle, still below 50, which says the economy is not really growing very strongly. The services sector is growing a bit better. The manufacturing is not growing at all. So they're going to have to goose that for a bit. A weaker dollar, lower rates, injecting some liquidity into the system. Then it's going to take time to negotiate tariffs and what the outcomes are. The Europeans are already going, well, maybe we'll play ball with you a bit more. And the Mexicans have done the same. So, I think we've got that. Also, I think Trump, one of the first things he will do in the first 3 months is try and resolve Israel. Also, I think Putin and Ukraine will get resolved. So a lot of the dollar premium, risk premium comes out, oil premium comes out, oil can drop lower, the dollar can weaken just because geopolitical tensions go down. So that's what I think the first order of business is: get this stuff out of the way, get things feeling better, get the economy moving, then start cutting government costs, which takes time, via deregulation first, and then via figuring out how can you save costs. And then there will be a broader implementation of tariffs, but that takes, even Scott Bessent said, we can't rush tariffs. It has to take time and has to be thought through. So that's more likely a 2026 thing, which is usually the back end of the cycle anyway, when liquidity is coming out. So you can see the pattern of liquidity and then liquidity coming out as they really start stripping out government spending and they really start tightening up on tariffs.
Raoul Pal has shared his outlook on Bitcoin and crypto, highlighting the current strength of the dollar but predicting its decline in the coming years. Pal sees this as a significant opportunity for Bitcoin. He believes that tightening financial conditions and shifts in government spending will create a favorable market for Bitcoin, making this a pivotal moment for investors. While the road ahead may be marked by its usual volatility, the potential for substantial gains is undeniable. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.